What's up, everybody? This is Lamine from investingsimplified.net. Today is May 15th, 2021. In today's video, we will show you why this chart is the most important chart and this level to pay attention to going into next week trading. We will take a look at the SPY, QQQ, oil, gold, dollar index, and TNX. We will wrap up the review with our fundamental view on the market. So stay tuned for more detail. Okay, looking at the FAANG index, as we can see here on a 4 hours time scale, this 4680 zone we think is very critical. It served as a resistance here back in January. In early February, we had this pullback, market rallied, we cleared the resistance zone, we consolidated there for a few days, we broke through, came back and back tested, we rallied again, we retested, market eventually bounced, but this most recent retest, market broke through. We stayed below it for a few days, and we are bouncing back again. Now market is retesting this critical resistance that was a former support. In our opinion, this level is a make or break. Bulls and bears have been struggling in this zone. It doesn't seem like anyone have an upper hand yet since January. Bulls take a control for a period of time. Bears took a control for a period of time. So now we are back there again. And the reason why we are paying attention to this level, as you can see, it has acted as a resistance and support how many times? 1, 2, 3, 4, 5 times. So if we get a clear break here, our expectation will be market will pull back. It will serve as a resistance again, and we are off to the races, potentially. That probability will increase. However, if market rejects here, let's say next week, in early part of the week, if we start to chop around here for a period of time and coil in the shorter time frame that we will be monitoring on a 1 hour 30 minutes time frame to update our clients, we think at any point in time, if market starts to struggle here and reject, we could potentially roll over again, possibly test this support zone, and if we break through that open more room for downside. However, we are ahead of ourselves. The most important thing is to pay attention to this 4680 zone. A clean break, we're good to go. A failure, be ready to take profit and put in short positions. And another the indicator we are monitoring is the MACD and RSI. MACD is still on a sell signal. However, we are approaching a potential buy signal. If we break through the resistance level that we just discussed, we believe MACD will give us a buy signal. But remember, MACD is a lagging indicator. So this bounce here, as you can see, MACD has shifted up, but it has not given us a buy signal yet. RSI has broken this short-term trend line, is approaching this upper resistance level. If RSI breaks, we are up for the races. We think market will have momentum to the upside. But until that plays out, we will continue to monitor the situation. So let's jump to the SPY and see what the key levels are. Okay, looking at the daily time frame of the SPY, as we can see here, since we had this 10% pullback in September to November, market broke out, has been grinding higher since then. And this trend line that we had drawn here since from the beginning of the breakout zone in November to about now, we think is a critical level. At any point in time we reach that level, we will be reducing our longs, if not outright take our profit and buy puts and expect market to pull back. The reason for that, since this correction, market haven't had any major pullback on S&P. It has been 4, 5, 6% pullback. This was the largest pullback we had. And we think market is due for some kind of a reset. Anywhere from 10 to 15% will reset the market for a potential next leg higher into year end. But we will discuss our fundamental thesis, the reason why we believe markets still have a strong probability of making new highs into year end. As you can see, market found a support at a 50-day moving average last week, and we have bounced for 2 days now, and we have pretty much filled this gap. We are at the upper range of the gap. If market can clear that gap level early next week, we are off to the races to test the most recent high, and if that breaks, this trend line that market has been respecting for a period of time, this is where we will take our profit and expect some kind of another correction. Whether then the correction will give us 10 to 15% pullback that we have been anticipating remains to be seen. So, but if we get any rejection at the gap here and we start to roll over, this 411 zone or 410.95 on SPY, which is 4100 on S&P, would be very important. If that happens, then market will form lower high. And if we break this level and this most recent support right around the 50-day, then market will form a lower low. And this will give us a great confidence that that potential 10 to 15% pullback we have been anticipating is definitely on the way. But we will continue to monitor day by day. Looking at the MACD, we are still on a sell signal. We really don't have anything on RSI. It's just pretty much sitting at the middle zone. So we will continue to keep an eye on that and see what signals we get on the indicators. With that, let's jump to QQQ and see where the key levels are. Okay, looking at the daily time frame of QQQ, as we can see here, we have been in this channel since September of last year. We tested the lower end 1, 2, 3 times, and we just found support at this level early end of last week, and market rebounded strongly on Friday. And the upper range, we have tested that twice. So we are now approaching an overhead resistance right around 327, 328, 329 zone on QQQ. Any clear break here and this downtrend resistance with this 50-day, we think QQQ will have a pretty good probability to rise, if not come and outright test this resistance level. Looking at the MACD is still on a sell signal. RSI has a pretty much bounce right around the oversold zone and is moving up, and it has a more room to run towards before it become overbought again. We took some positions here right around the 50-day, and the reason for that, we believe QQQ has more room to run compared to S&P 500. Although a lot of talking heads are blaming the downside move on QQQ based on what the rates are doing. But in our humble opinion, we think that the movement in the rate was not the major factor why tech is lagging. If people are just getting out of tech, I mean, everybody have a reason why they want to sell or buy a particular stock. But the decline that we have seen on QQQ, we think that's more bang for our buck in buying QQQ rather than buying SPY. Any clear break here, we think QQQ has a potential to run towards this all highs and this trend line. And any clear break here, definitely we will have a potential to test this upper range where we will definitely de-risk depending on what the market is telling us if and when we get there. So with that, we will take a look at commodities and wrap up the review with currencies and the bonds. Okay, looking at the WTI crude, since crude peaked on March 8, right around 68, the exact price I believe was 67.94, so call it 68. We corrected, we found support at 57 zone. The low was around 57.28. Our strategy has been playing this range. Any approach around the upper range, our strategy is to go short. And then any approach around this 57.28 is to go long. So we will continue to play this range until and unless we get a meaningful break to either direction. Let's say if if crude breaks above this 68, back test, found support, that will be our opportunity to go long. Our target might be around 75 to 80 range. However, if we get a rejection here, fourth support level will be the 63 zone. Any break here open those to 60 half towards 57 zone. There is really not much on crude to discuss except just play this range. No need to be overly bearish or overly bullish at this moment until we get a clean break to either direction. RSI on 4 hours is not overbought or oversold. It's sitting on the middle zone. We have a buy signal on MACD, but remember this is a range. MACD doesn't work very well in a trading range. It's more of a trending indicator. So let's take a look at gold. Gold on a daily time scale is approaching a key overhead resistance, 200-day and a trend line. Gold peaked here back in, I believe in August. Since then, it has been trending down. We tested this downtrend line 2 times. This could be potentially the 3rd time. So any failure here and any strength in the dollar index and any strength in TNX, we think that will definitely cause gold to roll over here. The key level to monitor is around this 1800 level. Any strong break here and this trend line, we think gold will have a momentum to the downside, especially if dollar index finds support, which we will discuss momentarily, and TNX, we think gold will potentially roll over. And looking at MACD is flattening, and RSI is approaching an overbought level around 70. So we'll see what the indicators tell us, as well as monitor the price action. So let's take a look at dollar index. Dollar index pulled back from 93 zone back towards this 89 to 90 level. We closed at 90.3. So we are monitoring this key support zone. Anywhere from 89 to 90 zone is the critical level. Any significant break here, commodities will have the opportunity to rally, especially metals. But if dollar index finds some bias here and start to rally, we think gold might be at the end of this move, and especially if rates rally as well. MACD is still on a sell signal. RSI is approaching oversold zone, so we'll see what the indicators gives us on a day by day as we monitor this critical support zone. Okay, so let's take a look at the 10-year notes. This is the 10-year note daily time frame. As we can see, this trend line, we tested the trend line 1, 2, 3. This is the 4th time, and we bounced. And this strong rejection candle here, this strong wick here that we have formed, we think this is the range to play. Anywhere from 1.47 to 1.77 is the key range to monitor, which at any point in time, if TNX breaks above this 1.77, we think that could put some pressure on metals, not necessarily on equities, until we clear that 2% level. Because our upper end of our target for TNX is at 1.95 to 2% level. We think that's where 10-year note probably will find a lot of resistance and ultimately roll over. But until then, we don't think equities should be under that significant pressure. But metals can definitely be impacted if rates rise and dollar finds support and start to strengthen. So we are digesting this prior move here for the past few months, which is very normal. After a strong move, you tend to consolidate, either correct with time or correct with price. Thus far, TNX is correcting with time, which we think eventually this should resolve itself to the upside. That's a possibility. We could be wrong. Market might roll over here, break this 1.46 level that we found support at last week when the inflation numbers came out. So we'll continue to monitor that. So with that, let's wrap up the review with our fundamental thesis, and we will update you with our videos on a daily basis. All right, let's wrap up the review with our fundamental thesis. As of Friday's close, after reviewing the fundamentals, we still remain positive. We believe that due to the Fed part and the unprecedented stimulus that has been going through the economy, the strong rebound in the EPS from last year's meltdown, we believe all these items will support the equity market going forward. So I know some of the talking heads on TV started bashing about Fed, what they should or should not do. At Investing Simplified, our focus is whatever the Fed playbook is, we just play by that. We don't try to predict what Fed should or should not do. Fed made it clear to us, as long as labor market remain fragile, they want to see labor market making substantial progress before any lift off in any policy. Also, they made it clear to us they want to see the average inflation target above 2% for a period of time. So if some of the experts believe that this should not be, that's up to Jerome Powell and his team to make that decision. We don't try to forecast what they should or should not do. So as long as Fed remains supportive for the equity market, we will allocate our portfolio based on where we think should be beneficiaries. So let's take a look at the details for the earnings. Looking at the earnings, EPS, and revenue growth for fiscal year 21, the operating earnings as of Friday's close was forecasted at 188.42, which brought the growth rate to 35.1%. and 12.9% revenue growth. And we think this is a pretty strong numbers. But remember, this is a potential for a peak earning growth, which means as we go forward, comps will start to become difficult. This year, comps will be really easy because we are comparing this year's numbers to last year's, because last year's numbers were significantly down. But as we go into 2022, the comps will become really challenging because it will be tough to beat these great numbers. So that's something to keep in the back of our mind. So looking at the forward PE and the trailing 12 months PE ratio, we forecasted our base case scenario for S&P to end the year at 4150 with a 65% probability. And our bull case is 45.65 with a 10% probability. However, we have a bear case with a 25% probability. If things goes haywire, S&P can drop to 33.20. And we will continue to monitor the fundamentals, and we will continue to monitor the technicals to see where we think market should end the year at. Also, please note, these numbers are guidelines for us. It doesn't necessarily mean the market should end the year at exactly whether it's at around the base case number or the bear case or the bull case. These are target zones. This is the range that we are playing with. In the event we see S&P around this level, to us, it means that the upside potential is minimal. So, which means we just need to be cautious to reduce risk. But if we see S&P around this level, we know that there is a significant potential upside, and we just should be looking for long opportunities. So this is what we use the fundamentals for as a guideline to see where we think we should be taking risk or de-risking our portfolio. And based on valuations are not a timing tool. They just tells you whether the forward returns will be good or not. So that's what we use the valuations for. And looking at where the 10-year note is placed in the our fundamental analysis as well. So with that, we hope that you enjoyed this video. If you do, please subscribe, hit like, so that YouTube can push this to more audience. And we will our viewers updated on a daily basis. Please review the risk disclaimer. Anything stated here is our opinion only. It's not a buy, it's not a recommendation to buy or sell any securities. With that, we hope you all have a wonderful weekend. Bye now.